want to specifically thank Katie and Mandy from Premier Marketing, the LTC team there, for hosting today's seminar. We really appreciate the partnership with them. Hopefully you leave over the next hour with a number of things that will help you with those conversations with your clients. So the objective of this A to Z of long-term care presentation is to review options currently available to clients for long-term care insurance. The first step in long-term care planning really is just to understand the risks that everyone faces. It's also important that we're aware of how likely we will need long-term care. Of course, many people are concerned about how they're going to pay for long-term care costs, which may or may not be covered by traditional health insurance, Social Security, or Medicaid. So our discussion will cover the major risks of retirement, the concerns about and costs associated with long-term care, the combination of long-term care and life insurance, and the addition of enhanced accelerated benefit riders, or ABRs. You're probably familiar with those. So hopefully after today's session, you'll feel better prepared to put a strategy in place for your clients. So let's move forward. So typically, obviously, this is a CE presentation that we've done in past. You've all likely been to CE presentations where it was a lunch and a CE presentation at the same time. Today, obviously, for many of you, this is over the lunch hour, so we appreciate you carving out time. This is for educational uses only. We're gonna shy away from giving any tax advice on this. We encourage you to consult a tax advisor, and any illustrations or numbers you see are really just for training purposes, and you'll see the whole disclosure that my friends in compliance have asked me to share there. So moving forward, again, typically we're doing this course in person. We've adjusted here in the last 15 months to do these CE portions, which is great because you don't have to leave your office, drive somewhere, sit in a room with a bunch of strangers, and then drive back. So you can hopefully carve this out while you're in your office today and get back quickly to work and meeting with clients shortly after this is over. So the one requirement you have for today, and this is important, is that you all need to be engaged in this seminar for at least 50 minutes. That's not a Premier requirement. That's not a Lincoln requirement. That's the state insurance departments say that you have to be on to get the 1 hour of CE credit, to be on for at least 50 minutes. And again, with the webinar tracking, we'll know who's on for 50 minutes, and I really want all of you to get the 1 hour credit that you're hoping to earn today. Obviously, learn a few things about long-term care too. We've made the decision because, and I think the feedback we've gotten is promising about this, is that we're going to skip the break. We're going to plow through. We're going to get done. My friend Katie Novotny is going to join us, and then I'll have a few closing comments. But we are going to skip. We're just going to get through the presentation material so you can all get your credit. You'll earn 1 hour of credit today. Sally Miller, who was on right before me, will have some additional instructions at the end. And then the credit for this course should be processed within about 10 business days. So you may not see it tomorrow, or you won't see it tomorrow on the State Insurance Department website. You may not see it in the next few days, but you should see it sometime in the next 10. And if you don't, I would encourage you to reach out to Katie and the team at Premier Marketing, and they'll rope us in if we need to. So again, and the last thing about this, even though I work for Lincoln Financial, I bring about 20 years. This is my 21st year of doing long-term care. We're not going to talk about Lincoln products during the CE portion of this today. This is really for you to learn about long-term care, the different types, and let's look at the agenda actually. So client concerns here, this is what was approved by the State Insurance Department. So we're going to look at what client concerns are. We're going to look at some studies. What's nice about this is often when you hear about long-term care, the carrier or the presentation will pull out some statistics from 10, 15, 20 years ago. Almost all of these will be in the last 3 years. So they're going to be relevant statistics, studies that have been done about people's views, advisors and clients' views about long-term care. We'll look at the risks of retirement, the need for long-term care, and then some information brought to us by the Alzheimer's Association, and that all of that information is new within the last year and a half. We'll look at the costs of long-term care. I'll provide some resources for you to find costs in your area. It does me no good with all of you from all over the country, 74 of you right now, to talk about specific costs when it'll vary. And I'll give you some resources there. So also look at long-term Care.gov, which is a great non-carrier website to learn about long-term care. We'll look at market awareness, the different funding options that are out there these days, because that's changed quite a bit, especially over the last 20 years from the time I started. We'll briefly touch on who are the clients in your book of business that would be ideal candidates to have this discussion, and then we'll wrap things up. So that's the agenda for today. Let's just dive right in. Here we go. One of the biggest concerns of clients nearing retirement is just ensuring that they have enough money to cover expenses and that their income will last as long as they do. Part of their concern is attributable to a few things. One, the changing safety net of government programs, regardless of the side of the aisle that you tend to lean. One thing is for certain is that these government programs will have been changing and will change over the next 10, 15, 20, 25 years. So the different programs that people have typically relied on may be quite a bit different by the time your client's likely to need long-term care or extended care. We've also seen over this last year diminishing benefits provided by employers. I used to work for an employer that offered a long-term care plan. I don't see that very often anymore, where carriers offer a long-term care plan, reduction in the total benefits as companies have forced to tighten their belts when it comes to expenses. And then finally, rising healthcare costs. So I think we've seen that across the board. Just think about this last year. I know I saw a study here as recent as December, and that assisted living costs just last year went up over 6%. So you're going to see increasing healthcare costs as those care providers take on additional cleaning costs, additional costs to hire individuals to provide care. So that those costs are often passed on to the consumer. So you're going to continue to see those rising healthcare costs moving forward. Finally, we know that more than 2/3 or 68% of clients say they're extremely or very concerned about the increasing cost of healthcare. And that was a study Lincoln had done back in May of 2019. It was a planning for long-term care survey that Lincoln had conducted. So we also know people are now living longer than ever, which impacts how they plan for retirement and the income that they need to live on. So total life expectancy, and we know this, has increased by 9 years and is projected to increase another 7 years. I'll say that again. Total life expectancy has increased by 9 years and is projected to increase another 7 years. We also know that 98% of clients say they feel more confident about their financial future when they have a long-term care plan. And what's important when we say a long-term care plan, that doesn't necessarily mean they have a long-term care product, insurance product in their portfolio. But what's important and what I want you all to take away from today is that they all have a plan. Now that may include a long-term care insurance solution, but it may also just mean that they've had a conversation with their family, with their advisor, with you, and have a plan on how to fund that, where they want to receive their care, how they want to receive it, where they want to receive it, and that those wishes are known to their loved ones. That's key. We've seen too many people get in a situation where suddenly they need extended care and their loved ones do not know what their plan is. Do they want to stay at home? Would they prefer to go to assisted living? How do they want to pay for it? Which asset are we going to use first to fund those extended care expenses. So, and the aging population places an additional burden on families. And for many of you on this call, you may have experienced that yourself for a loved one, and it may not have been the financial burden a lot of people think of. It might have just been that burden of taking mom or dad to doctor's appointments, providing care, finding a way to get him or her a bath. All of those things can be extremely stressful. I've seen it in my own family where it's just is that emotional and physical burden on those loved ones, often more than that financial burden is what I've seen in my own family, and I've heard from advisors around the country and clients that I've worked with over the last 20 years. So like I did 2 studies. We asked how financial advisors or financial professionals rank the risks in retirement, and then we did a similar survey and asked those same questions to retirees. So here's how financial professionals would rank those risks in retirement. Number 1 being longevity. As that financial professional, their goal is to make sure that there's enough money down the road to fulfill their wishes, to provide for their needs. Longevity being the number 1 risk in retirement that those financial professionals saw. Second being volatility. We've seen that volatility play out over the last 14 months. We saw the pullback in the market, and then almost a year now of continued growth in the market. Number 3 being healthcare, and then number 4 being the rise in inflation. Now, the same retirees that we asked those questions, number 1 consistently was healthcare. That was their biggest risk they saw in retirement. Number 2 being inflation, the increased cost of buying food, taking care of buying other things that they need, volatility, and then finally longevity. So those are how the 2 different financial professionals and retirees risk. Each of these are critical factors in retirement planning. So financial professionals rank risks in retirement, and retirees rank the risks in retirement. That's what we've looked at so far. We're going to see differing opinions. Also, as we move forward, we'll look at the different types of care moving forward and how those costs, often we're going to see people underestimate wildly the cost of care in their area, especially if they haven't had a personal experience. So moving forward in the next section here, awareness of need hasn't generated action. We've seen this play out over the last 30 years. We saw traditional or standalone LTC policies first offered in the early 70s. Those become extremely prevalent in the 80s, 90s, and early 2000s, but it hasn't generated a ton of action. We know 63% of consumers do not have any kind of plan for long-term care, either written or formal. It's almost 2/3 of folks out there that have no plan at all. Among the 37% that we see do have a plan, only 14% have a written formal plan, while 23% are putting together an informal plan. And finally, 78% of consumers see the value in including long-term care in financial planning. So some startling statistics there. This is an important chart here. As we look at, you're going to see an orange line, and we'll call it a maroon line. If we go back to 1990, there were about 30 million folks age 65 and older at that point. You'll see if we fast forward today, that number is almost doubled to about 60 million individuals age 65 and older. What we're going to see is that continue to rise. By the time, if your client's 60 right now, by the time they're 80, 20 years from now, we're going to see that number be almost 85 million to 90 million individuals 65 and older. I've also often heard this referred to as the silver tsunami, we're going to continue to see people age, and that's going to help drive those costs of providing that care. What we're also seeing in the maroon line is if you go back to 1990, there were about 65 million people ages under the age of 18. Today, that number stands at about 75 million. Again, 20 years from now, that number will be just around 78, 77 million individuals. So we're going to see that pass up really over the next 10 years. You're going to see an aging population over the next 10 years, and certainly 20 to 30 years from now, we're going to see significantly more individuals in that 65 and older. And again, driving the point of individuals, that cost of care is going to rise because the number of people getting into that caregiving field is not keeping up with the number of people becoming 65 and older and likely to need extended care or long-term care. Let's move forward here. So our friends at the Alzheimer's Association, many of you are very familiar. Alzheimer's Association does a great job of getting information out in the media. There will be Alzheimer's walks. I'm here in Minneapolis. There's an Alzheimer's walk just about every year to raise awareness of that. Many of you on this call, of the now almost 80 folks on this call, have been impacted either by a loved one or a close friend that have battled Alzheimer's. And we know it can be a devastating disease, not only for the insured, but their loved ones and everyone close to them. So a couple of statistics from them. These are all from January of 2020, last year. One, right now, more than 5 million Americans are living with Alzheimer's. Secondly, 16 million Americans provide unpaid care for people with Alzheimer's or other forms of dementia. It's currently the 6th leading cause of death in the United States. And this is startling to me. Since 2000, deaths from heart disease have decreased 7.8%, so almost 8%, while deaths from Alzheimer's have increased 146%. If we think back to that last slide and the number of individuals 65 and older dramatically increasing over the next 10 to 30 years, we're going to continue to see the deaths from Alzheimer's continue to increase. Hopefully, as the medical community continues to look for a cure, we'll hopefully see that tick down, but at the direction it's going, it's not. So 1 in 3 seniors with Alzheimer's, 1 in 3 seniors currently dies with Alzheimer's or another form of dementia. And finally, in 2020, Alzheimer's and other form of dementia cost the nation about $305 billion. So this, you can find this and other information, support services, resources for loved ones, for those of you that are out there with a loved one, at alz.org. So alz.org/facts is where we got this information. But again, alz.org has a ton of great resources for not only the individual battling Alzheimer's, but for their loved ones on support in their area. So a little bit about the cost of long-term care. The typical retirement plan tends to focus more on about how long retirement assets will sustain a certain amount of income each month. Often there's little attention paid to the cost of long-term care and the impact it can have on a surviving spouse's long-term care security. So in 2019, the nationwide average for a private room in a skilled nursing facility was $110,000. That was in 2019. In 2021, we're seeing that closer to $115,000 a year. In some states, obviously considerably higher. In other states, it was a bit lower. I always get asked, especially when I've done these presentations in the past, where do you think, I ask for people to raise their hands, where do you think the most expensive cost of care in the country? Consistently, the first hand goes up. It says, Rob, it's New York, it's Massachusetts, or it's got to be California. Far and away, the most expensive cost of care in a private nursing home room is in Alaska. Right now, on average, per month, it's running more than $30,000 a month in Alaska. So nationwide averages here, again, this is nationwide averages. And again, I've never had a client or an advisor say, you know what, Rob, we're doing some long-term care planning. I think we want to stay at an average facility. Almost every time people say, you know, I prefer to stay one of the nicer, newer ones on this side of town. You know, Susie was at, you know, Butterfly Hearts Nursing Home, and they rave about it. That's where I want to stay. I want to stay at the newer, nicer one. So again, these are the averages. Assisted living right around $5,000 a month for a private room and an assisted living. Nursing home, you know, 9,300, closer to 9,500. Now in 2021, almost $115,000 a year. Semi-private room, obviously a little bit less expensive. I've never had a client also say, you know, my plan is to go to a nursing home and I'm okay sharing that room with someone else. Home health aid, you're going to see this is the one number that's pretty consistent around the country. Obviously, it does vary on if you're in an urban or rural area, but on average, you're going to see home health aides run right around $25 a month. To give you some perspective on the higher end private nursing homes in a DC area are around 6,300. That nursing home in DC around 130,000. And to this point, you can see the home health aid still right around $25 an hour. So what resources, well, how can I find the cost of care in my area and maybe print out something to share with my client? If you go to whatcarecosts.com, and I'll say it again, whatcarecosts.com, there'll be a map, and you'll be able to click on your state. You'll be able to drill down to different metro areas, or look at a nation or a statewide average for nursing home, assisted living, and home care. It'll ask for a sponsor code in the upper right-hand corner. You could just put LTC or Lincoln. Either one of those work for you. But again, whatcarecosts.com. Go there after today's seminar, drill down, and you'll be able to find out the costs in your area. If the client says, you know what, my plan is to retire in Tampa, or I plan to move to Scottsdale when I'm retired, what are the costs of care there when we're doing the planning? You can go on there. You can also do projections. So if you say, hey, I think between now and the time you're likely to need long-term care, I anticipate the cost of care going up 3 to 4% per year. You can adjust that in there and come up with specific numbers. So when you're doing that comprehensive financial planning, you can base it off realistic numbers. So whatcarecosts.com, in the upper right-hand corner, you can enter LTC or Lincoln. Another great resource for you is longtermcare.gov. I'm looking for information about long-term care. I prefer not to use a carrier-specific website to get my statistics. I don't want to see them. I want to remain independent and just provide updated, valuable information to my clients. So longtermcare.gov is another great resource for you. We know from that website at age 65, in average health, women have nearly an 80% chance of living to age 80. At 65 and at 72% of nursing home residents are women. I think many of you could probably attest to that if you've probably been limited to nursing home visits during the last year because of COVID. But if you think back prior to that, I can even think back to February last year. I visited a loved one in a nursing facility in northern Minnesota over the lunch hour, and I only saw one other man having lunch during that lunchtime. So more often than not, we're going to see women are those nursing home residents. Women spend twice as many years in a disabled state as men. At the end of their lives, 2.8 years if they live past 65, 3 years if they live past age 80. I'm often asked, well, what's the average length of care that we're seeing? And again, Length of care could mean a lot of things. That doesn't necessarily mean in a nursing home. It could mean at home. Maybe we transition to assisted living. Maybe at the end it's nursing home or hospice. On average, we're going to see men need care about 2.2 years, women about 3.7 years. So a good number, just a kind of a baseline point, is about 3 years if we're doing some planning. Certainly if they've had a history of Alzheimer's, another form of dementia, you might want, if you're doing that planning, looking at the cost of care, plan on 3 to 4 years or even longer. What you're also going to notice is that costs for memory care facilities will be even more than nursing homes. In Minnesota here, where an average nursing home is right around $11,000. I've had colleagues or financial advisors I work with here in Minnesota that have memory care bills in that $14,000 to $15,000 a month range. If you think about $14,000 to $15,000 a month, loved one needing care in a memory care facility for 2, 3, 4, 5 years, that can add up to be quite the bill. So again, longtermcare.gov is a fantastic resource for information like this and all things long-term care. So we've talked a little bit about, again, this is the point where we would typically do a little break if we're doing this in person. But we talked about the awareness and the future need for long-term care. I've given you some resources, alz.org, whatcarecosts.com, longtermcare.gov. Again, great resources, independent, non-carrier websites to learn more about long-term care. Let's stay on track with that longtermcare.gov. Often, the misconception is out there that Medicare or the government's going to pay for my long-term care. Now, certainly there's a chance that they will. Medicare, which impacts mainly people in retirement, typically offers coverage or limited coverage for medically necessary nursing home or home health care benefits. You're going to see that will cover for the first 20 days, and then there's going to be a significant copay days 21 through 100, and then after day 100, Medicare will not pay anymore. Medicare will not pay for custodial care or support services for daily living, and that's important to know. In addition, what does a Medicaid cover? Medicaid offers care to low-income individuals or those that have elected to spend down those incomes, those low-income individuals and families who cannot afford healthcare costs may pay for certain home and healthcare services that are means tested. Again, means tested, the plan is to rely on the government, which I've never worked with an advisor who suggested to their client that, hey, we're going to rely on Medicaid. That's our long-term care funding plan. For some, that is their only plan. But it's important for people to know that that is means tested, and Medicare is limited to the amount of coverage to that 100 days, and there's a significant copay days 21 through 100. There's somewhat of a disconnect. We've also seen this in how effective financial professionals are reaching the majority of their clients about the importance of planning for long-term care expenses. 91% of Americans believe long-term care planning is an important component of retirement planning, but only 14% have talked with a financial professional about how they would plan for long-term care. One of the things, for those of you that have been in the business for a while, you may have seen this, it seems like each month is an awareness month of something. It's 2 or 3 things. Long-term care happens to be, November happens to be long-term care awareness month. I think they elected that a long time ago because they know that families are often together, especially for the first time in maybe a year, at Thanksgiving. And one of the things we notice as we're together, if I happen to be with my parents this past weekend, they're in their mid to late 70s here in Minneapolis, and I notice mom's having a harder time getting up the stairs, getting around, getting off the couch. you notice things like that, and that prompts discussions not only with them but with my sibling about, hey, if mom or dad were to need care, who would be open to providing that care? They don't live in the same area as me. My parents live in Chicago. How would we get that care for my parents? Who would provide it? Would we be open to having a loved one come live with us? And for a lot of people, of course, we would do anything to help our loved ones, but are we capable? Are we working full time? Do we have space in our house? Is our home friendly? Do we have a ramp? All of those things are important considerations when we think about planning for long-term care. So what is long-term care? If we talk about qualified long-term care is a need for assistance or supervision with activities of daily living. If you lose your ability to independently perform at least 2 activities of daily living for at least 90 days, and that's the long-term nature of it, so or require substantial supervision due to a severe cognitive impairment, i.e. Alzheimer's or Parkinson's, long-term care protection can help you cover those costs. So 2 out of 6, those activities of daily living have been standardized for a while. You're going to see the same 6 activities of daily living regardless of insurance solution or carrier you're looking at, and those are bathing, continence, dressing, eating, toileting, and transferring. Again, bathing, continence, dressing, eating, toileting, and transferring. If you need help with at least 2 of these, and if you think about 2 of these, getting dressed or transferring to and from the toilet, we may also need help bathing. Typically, you're going to need help. If you need help with 2, you're probably going to need help with 3. One of the interesting things is when we think about our life, one of the very last things, or the first things that people do for us, is bathe us. That's also one of the very first things that we need help with too at a long-term care stage. There's also so we have those 6 activities of daily living, or you can qualify for benefits with the diagnosis of a severe cognitive impairment. And typically that's your client's primary care physician is the one that's certifying that. There are 2 main types of policies out there. In the standalone space, there are only reimbursement policies. There used to be indemnities type policies. In the other types of LTC solutions, whether it's hybrid or life with accelerated benefit riders, there are also indemnity style policies. Certainly advantages to both. An indemnity type policy is going to pay that entire daily or monthly benefit regardless of the actual cost of care. Now, not to be confused, you still need to have proven that you need help with at least 2 out of 6 activities of daily living or have a severe cognitive impairment. So that's not, you're getting the monthly benefit each month, but you're still needing to show that you need that type of care. Reimbursement policy will pay up to that full daily or monthly benefit, but never more than the actual cost of care. The advantage here is that you're ensuring that those dollars are going to where they were intended. They're actually going to reimburse a home care agency or an assisted living or memory care facility that provided that care, and we're ensuring that those dollars are going where they were intended. So who pays the bill? Obviously, we just touched on common ways to pay for long-term care: Medicaid, personal savings, family or friends. I don't know if I have any friends that would pay for my long-term care. Certainly I have family that might help me. There's long-term care insurance, hybrid products, and obviously there's also reverse mortgages. You'll often see those commercials late at night on the TV. How will your client's family pay a price? 83% of help for older adults in the US comes from family members or other unpaid caregivers. And that's, that number can be surprising, but it's often the default when people don't have a plan. So they haven't had a plan, they're forced to have loved ones, family members, or friends, or other unpaid caregivers provide that care. And 16 million provide care for someone who has Alzheimer's or other forms of dementia. So what are the different options out there for long-term care planning? We'll go across the spectrum here. There's traditional long-term care insurance, though often referred to as standalone long-term care. Those started back in 1973. We saw a big influx of carriers offering that type of solution around 1987, 88, 89. At one point, there were over 100 different insurance carriers offering a traditional long-term care insurance solution. That number stands around 12 today. There are hybrid products. A number of different carriers, about 9 different carriers and growing, offer some type of hybrid LTC solution. For many, their default long-term care planning option is putting on an accelerated benefit rider onto their life insurance policy. So again, primary objective being that estate planning, the life insurance, and adding on that LTC or chronic illness rider. There are annuities out there, a few annuities with long-term care riders. And then finally, for most, the default planning option is self-funding. And it says, you know, we feel like we have enough resources, we're going to pay for this. We understand it's $10,000 a month right now, and it will rise. Our plan is to use some of savings to pay for that care. And at that point, they're paying for it dollar for dollar, where a number of these solutions provide leverage where they may pay $1 for $8 of care. So those are the different planning options. Let's look at some of the pros and cons. So obviously traditional LTC, for many, when you think about long-term care insurance, this is the solution that you're thinking about. Many of you either own a traditional LTC policy, have written it, or have loved ones with traditional LTC. I myself have a loved one with a number of loved ones with traditional LTC policies that have owned it for years. Obviously, a lot of benefit flexibility. Those policies have evolved quite a bit in terms of benefit periods offered. Payment periods have changed quite a bit over the last 10 years. Tax-free benefits, an opportunity to deduct a portion of those premiums up to age-based limits. This is going to be your lowest cost entry into long-term care protection or extended care protection. It will be the lowest premium. You'll see affordable premiums. And what all of these solutions do, and they put it under the pros here on this slide here, is family can be the managers rather than the caregivers. And that's key. That's what all of these LTC solutions do. Besides providing tax-free dollars, it allows loved ones to supervise that care rather than be the provider of that care. That's why, like for myself, my parents have a traditional LTC solution. They're in Chicago. This provides me the peace of mind of knowing that they have a long-term care plan in place and I can help supervise that care rather than be the one provided. Cons. Premiums are not guaranteed and may increase. For many of you out there, you either have had a personal experience with this or have had clients have bought a traditional LTC policy where the premium increased down the road. And those increases, I've seen those increases be anywhere from 5%. The most recent one I saw was 300% for a rate increase. I get advisors to send me rate increase letters and say, Rob, what should we do here? Do you have any options? And I review those, and so you're going to see those rate increases vary wildly depending on the carrier or how long the individuals had that policy, or even what type of inflation or the benefit period they elected initially. So many consumers also reluctant to buy this type of long-term care insurance because they fear that their investment will be wasted if they don't use it. I don't think, you know, some people refer to this as a use it or lose it. I still see value in having that peace of mind of having protection. We have auto and homeowners. We hope we never have to use those, but it's nice to have that peace of mind of having that protection. And obviously, just there's the concern from consumers that, hey, I bought this, I have this protection, but as I move into retirement and I'm on a fixed income, will I be able to afford if the insurance carrier raises those rates down the road? And will we have to make tough decisions on pulling back on the amount of coverage we have, or dropping the policy, or making changes to other things in our lifestyle to accommodate that rate increase? So again, pros being you have some flexibility, there's opportunity to deduct a portion, and again, lowest cost entry to having the protection. So second to last review here, and we're right at 41 minutes. I appreciate all you hanging with me. We want to get you out of here and make sure you all get the credit you deserve. So we talked about qualified long-term care, who pays the bill, what is traditional long-term care insurance. Let's look at next hybrid products. What solutions do they solve? And we'll touch on insurance riders, and then look at who your candidates are in your book of business for long-term care solutions. Hybrid products. These have been around for about 33 years. You're going to see hybrid products. We've seen other carriers enter this space in the last 5 years. I've heard rumblings of other insurance carriers getting into this space as this advisors and clients have gravitated to this type of solution for a variety of reasons. One, policies are typically designed for significantly more long-term care benefits than life insurance with long-term care death benefits. So you have a death benefit, let's say it's $100,000, but your long-term care benefit is $500,000. These hybrid products are typically built on either a universal life chassis, a whole life chassis. Those are the chassis. They use those types of policies to provide guarantees. Long-term care benefits typically reduce the policy's cash value and benefit and death benefit. These policies offer return of premium options, which you don't typically see in traditional LTC. There's flexibility in design. These policies offer inflation riders too. Residual death benefits, meaning that if you exhausted the entire benefit for long-term care, in my example, you used all $500,000 for long-term care, you've exhausted the death benefit, there is still, depending on the carrier, a residual death benefit, almost like a little final expense policy. These policies also have elimination period options. Some are 90 days, some are 60 days. There's one that I could think of that has no elimination period. So a variety of elimination periods, and again, for those of you that aren't familiar, elimination periods are essentially a deductible. How long is my client going to pay out of pocket before the insurance company kicks in and starts reimbursing or paying a benefit? And again, those will typically vary between 0 and 90 days. The other benefit is that it's an additional asset in the portfolio because it is a life insurance policy with cash value there. Cons, typically there is only one elimination period. With those traditional policies we looked at before, there might be a variety of elimination periods available, and those vary between 0 and 180 days, typically 0, 30, 60, 90, 180. With these hybrid solutions, there's typically one. There might be a limited daily or monthly benefit period combinations, and might be more suitable for clients with sizable assets to invest. Now, often I think these types of solutions, advisors think of it as, well, my client's got to have $100,000 or it's got to be a lump sum. What we're seeing in this space is more often than not, these types of hybrid solutions are funded over a period of years. So yes, you can cut a check, write a check, and be done in a single premium and not have to worry about it anymore. But you also can pay for it over 5 or 10 years or even longer, depending on the carrier. The last advantage that isn't mentioned in here is that the premium rates are guaranteed. The client knows exactly what their premium is going to be. There are no surprises, and they also know what their benefit's going to be 10, 15, 20, 25, 30 years down the road. So that peace of mind of knowing exactly what I'm going to have, I have cash value, there are return of premium options, I can pay for it over a period of years, and those benefits are going to be tax-free. And if I'm that 1 and 2 after age 65 that never needs long-term care, well, there's going to be a death benefit of, at least in most cases, what I paid in. So we've taken away that use it or lose it fear. So hybrid products have certainly become an attractive option. Life insurance with chronic illness or accelerated benefit riders, obviously these are, I look at it as you go into McDonald's and you're going there to buy a Big Mac, you're also throwing in a fry. The Big Mac's the reason you're going there. Fries are that additional, it would be great to have as well. Primary objective here is typically the life insurance, where those hybrid solutions we just looked at, the primary objective is the long-term care. The peace of mind of knowing it's built on a life insurance, that there's a death benefit there if I never need it. Hey, that's a great thing to have too. These will often have a terminal illness benefit built in. They're available as an option on most permanent life insurance policies. Almost every carrier I could think of offers some type of chronic illness or benefit access rider or chronic illness rider on those permanent policies. Benefits can be used for anything that clients choose. Benefits are designed to be excluded from taxable income, as are the LTC benefits from traditional or those hybrid solutions. Life insurance with ABR cons typically don't cover non-permanent or recoverable events, where hybrid or traditional solutions will cover those types of events. They could be restricted by the IRS per diem limit in order to avoid a taxable event, and they will reduce the policy's death benefit and could deplete the death benefit entirely. So for the example, if you had a $500,000 death benefit, that was the objective of purchasing the policy. If it had a ABR rider on there, you would have the access, typically at 2 or 4% of that per month to use for extended care. But the benefit wouldn't exceed the amount available for long-term care. There's long-term care annuities, those combination type products. These are great for leveraging assets to provide a pool of long-term care dollars. That ability to retain that annuity contract value and death benefit of long-term care is never needed. An opportunity to transfer, and this is what I like best about these, transfer an existing annuity contract to one with long-term care protection for tax benefits. Now, these options might vary by state, but certainly for those clients out there that have a number of annuities, may not need those, and they may not need 1 or 2 of them. That's a great opportunity to transfer that into a solution that leverages that annuity to pay for long-term care. Then finally, self-funding. We talked about this already. Consumers believe their savings or government benefits will cover the cost of long-term care. Resist long-term care insurance strategies that are often recommended by you. So who in your book of business? We're right at 50 minutes right now. So if we think about this, long-term care solutions, you're going to see options out there depending on the carrier, anywhere between typically 18 and 80 years old. Now, those ages, I would lean on my friends at Premier Marketing. There have been adjustments this last year because of COVID, so you might see some carriers stop at 70 or 75, some go to 80. Often, many start at age 40. But if we think about our book of business, often you're going to typically think about zeroing in on those clients right around age 55, but certainly 45, anywhere really between 40 and 70. Obviously, the younger you start, the lower the premiums are going to be, or the more leverage you're going to get if it's a hybrid plan. And 2, more importantly, the more likely they are going to qualify for care because they're hopefully going to be healthier. So we're going to typically look for those clients with 500,000 or plus of invested assets. They may or may not be in the distribution phase, often planning for funding future healthcare needs. You can fund these, obviously, an executive bonus. If they're older, those require minimum distributions, or funding these out of income, especially those traditional LTC solutions, some of those hybrid solutions that you can fund paying annually or monthly over a period of years. Maybe it's 10, 15, 20, 25 years. So we can keep those premiums at a manageable level. Upper middle income clients 45 to 65, again, that's probably the real target market, annual income of 100,000 plus. If they're, for many of those individuals, the primary need might still be life insurance, depending on what stage their kids are at, if they're in college or before college, or they still have a mortgage on their house. Funding strategies, you can repurpose annuity income, or again, flexible premium payments. Almost all of these options we talked about today offer options to pay it out over a period of time. So in summary, before I bring Sally back on and we introduce Katie, clients are becoming increasingly more aware of the potential need for long-term care. They've either seen it in their family, the loved one that they have. Clients just need to be educated about the future LTC costs. Often I'll sit down with an advisor and the client will ask them, what do you think the cost of care is? Typically, they're guessing at anywhere between 50 to 60% of the actual cost. Traditional LTC, for many, that's what they're thinking of when they think of long-term care insurance strategies at traditional LTC. Know that not only are there still great companies that offer traditional LTC, but there are other options. There are combination life and LTC products. There are hybrid solutions that are built on life insurance chassis for the guarantees, but the primary objective is to leverage those dollars to pay for long-term care. And then the life insurance with accelerated benefit riders are a great option, but often require that disability to be permanent. When again, primary, it comes down to what's the primary objective. Is it life insurance? Is it the long-term care? If they don't need long-term care insurance and they need long-term care protection, they're looking at the lowest premium. That's where a traditional LTC option will be attractive. So you see the slide, complete your attendance sheets. Obviously, this is the same presentation we typically do in person. What I want to do is bring on Sally Miller one more time with some instructions for some folks. We want to make sure, now this is important for all of you that are on right now, I want to make sure you get the credit you deserve. You sat here for the last 54 minutes. I want you to get the credit. So Sally, I want to introduce you again, and then we'll turn it over to Katie briefly.
Thanks for joining us today. As a reminder, you just needed to participate for 50 minutes to receive the credit. Also, if anyone is looking for Florida, Minnesota, Michigan, Oklahoma, or South Carolina credit, there is an affidavit that needs to be completed. I did put the link to the affidavit in the chat box with directions on what email address to send that to. That will be required if you're looking for any of those state credits before the credit can be processed with the state. So please take a moment, complete the webinar affidavit, and then email it to webinars@questce.com. Again, thank you for joining us today, and back to you, Rob.
Hey, appreciate it. Thank you, Sally. Again, appreciate you all carving out. What I want to do is introduce my good friend, Katie Novotny from Premier Marketing for a few comments, and then we'll touch on one more thing, and I have an additional opportunity for all of you to earn a CE voucher. So Katie, go ahead.
Well, thanks so much, Rob. I really appreciate it. As always, this is so informative. You know, I want to thank everybody for taking the time. We had great attendance today, and we really do appreciate that. We here at Premier, I'm getting actually a lot of questions regarding different products, how different products work, and we will reach out to you on that. Because this is a CE course, we really wanted to address the education on this side, but absolutely, we have all kinds of solutions available in the LTC market. So I look forward to speaking to each and every one of you. As for additional questions, one question we are getting, and maybe you can help me out here, Rob, is regarding any slides. Are these for training use only, or are any of these shared?
I'll share the presentation with you.
Okay, perfect. Thank you so much. That is something that I continue to see. So
Yeah.
please, as always, feel free to reach out to Mandy or I here at Premier. We are very happy to help you, whether it is case design, just product information, or even going back over target audiences. We really do appreciate the opportunity and look forward to your call. With that, Rob, would you like to finish us up here?
Awesome. Katie, what's the number they should reach out to?
The number at Premier is 1-800-365-8208, and my extension direct is 226. But what I'll do is I will put our contact information in the chat right below Sally's message so everybody has it.
Awesome. Katie, appreciate your partnership on this thing. So we got 74 folks on. What I want to do is give everybody an opportunity to earn an additional CE voucher that you could go ahead and use for a course of your choosing. So what I'm going to do for the next 5 minutes, I'm committing to for 5 minutes. It's been 57 right now. The next 5 minutes, I want to give you a brief update on Lincoln MoneyGuard. And so you all kind of have an idea where that falls in the long-term care space. So let me move this over to the presentation slide. So Lincoln MoneyGuard has been around since 1988. This August will be 33 years that we've been offering long-term care solutions. It's really become the flagship product of which all other hybrids are compared to. There's, like I said, there's about 9 other carriers right now, and we're seeing more and more carriers enter this space. I've heard of rumblings of at least 2 others that might join over the next year or are working on solutions right now. And what's good, the good news is for you, is that forces Lincoln as the leader in this space to continue to work on solutions. And our Lincoln MoneyGuard really has been that flagship guaranteed solution for a number of years, but it's evolved quite a bit too. So this flyer you're looking at right here, I'll make sure Katie has this too. But what I want to do is over the next 4 minutes, tell you why we've become the leader in this space. 1, we have a 0-day elimination period. The thought behind that is once your client qualifies for benefits, you know, they have need the 2 out of 6 ADLs, or they have the diagnosis of a severe cognitive impairment, they've paid into this policy for years, maybe they paid a lump sum. Lincoln provides benefits day 1. What we know is about 25% of claims, LTC claims in the space, are done by 90 days. So that means 1 in 4 LTC claims the client wouldn't even seen a dollar from that policy. Lincoln MoneyGuard has this true 0-day elimination period. We're the only carrier in this hybrid space that offers that. I talked about reimbursement or indemnity policies. So often, I think sometimes reimbursement gets a bad rap. You think, well, I got a reimbursement policy. That means I gotta come up with that money out of pocket first, pay that provider, that home care agency, that assisted living, and then I gotta turn around and send the bill to the insurance company. And those big bad insurance companies, I'm confident they're gonna sit on it, and who knows until how long it's gonna be until I get reimbursed. One last year. Here's a key thing to remember, and the advantage of working with a carrier that's been doing it this long. Last year, for the claims that were set up in good order, our average turnaround time to get a claim paid was 3 days for reimbursement. Now, the other option, and this is what I would encourage my own loved ones and family members, and what I would encourage all of you, is that we have the ability to set up on a direct bill. If we think about in a long-term care event, the most stressful time is that time we need the policy, or we're having a home care agency coming to take care of mom, or we're moving mom or dad into assisted living. We can set it up on a direct bill where that care provider bills Lincoln and Lincoln pays them, and that insured and their loved ones are staying out of the billing process. Takes them out of that billing process, and we're ensuring that those dollars are going to where they were intended, and that the son or daughter or nephew aren't using those dollars for something that they weren't intended. So you have the ability to do a direct bill, or you have you can do a reimbursement. One of the things that's brand new with Lincoln MoneyGuard, as of actually yesterday, you can now get up to a third of your monthly benefit in cash now. If that, it's all part of that plan of care. If the plan of care says, you know what, my wife is going to take care of me 5 days a week, and it's up to 5 days. My wife's going to take care of me 5 days, and we're going to have a home care agency come in the other 2 days. Our new cash benefit, and again, I'll get you a piece on this to Katie and her team. We allow you to get to up to a third of your monthly benefit in cash. And the great part is that other 2/3 isn't lost. You still have the other 2/3 to be reimbursed for that qualified care. And again, this is going to come into play if you're at home, which is where most people would tend to prefer that they receive that care. So this is a brand new benefit on policies moving forward. We made this enhancement as of yesterday, but that's a nice feature. Affordability options, we're going to go anywhere between 40 and age 80 for MoneyGuard 3. 40 and age 80. You can go with a single premium or up to 10 years or to age 70. So a 50-year-old could actually do a 20 pay. A 70-year-old could do as long as a 10 pay. So options there. Concierge care support, meaning you have a single point of care contact at time of claim. And then obviously these policies are comprehensive. They're going to cover you at home, adult daycare, respite care, assisted living nursing home. There's hospice services, bed reservation benefits. These policies are going to be comprehensive. Lincoln MoneyGuard does not require a paramed exam. That's huge. Your client's going to complete an application, and then we're going to ask them to get information on their health insurance or their current health. They can do that over the phone, or they can do that online now, and that's new as of November. So those clients 60 and younger, no paramed, no APS, no phone interview. 61 and older, they could do everything online if they prefer, and then they would only require a 15-minute cognitive screen for anyone 61 or older, and that's pretty standard in the industry. We also don't have a tobacco rate. You either get a standard rate if you're single or widowed, or you get a couples rate. So a lot of flexibility in terms of funding options, an easy new business process or underwriting process where the client doesn't have to have a stranger come into their home. We make it easy for them, and they know that those benefits are available day one. So again, I'll get you this piece, our marketing piece on our new Flex Care Cash. That's that indemnity feature that we have. And Katie and her team will also have a copy of today's presentation. Right at 1 hour and 4 minutes today. Appreciate all of you carving out time. And then I will make sure that everyone that stayed on today, over the next week, I'm going to get Katie and her team CE vouchers that they'll be following up with you. Make sure you get that voucher. Again, she should have those here in the next couple of days, and then as she follows up with each of you. So if you stayed on for 50 minutes, you got your CE credit for today, and you'll have an opportunity to take another CE course, compliments of our friends at Premier Marketing. So thanks again. Again, 1 hour and 5 minutes. Appreciate you all carving out time, and have a great rest of the afternoon. Thank you.